If you have GameStop stock, it is not over. That sleepy dog over there is Meatball. My name is Andrew, and today I'm going to talk to you, specifically you, if you own GameStop, AMC, or one of these stocks that have been manipulated by institutions in the past. Today I'm going to tell you exactly how they are covering up their tracks, pretending like it's all over. But for you, if you watch to the end, I promise you something. I'm going to tell you exactly the information you need to know for today and how you can smash that like button to tell other apes, to tell other bag holders, to tell other diamond handers exactly what this channel is all about and how you can find out personal finance information, investment information, and data science information right here on this channel. Hey, thanks for joining. As always, I'm putting GME's price right down there because as we saw, it went all the way up to $88 today. That's an auspicious number right before Lunar New Year. But today's rally means only one thing. It's far from over, bag holders. Evidence points to shorts that did not cover, pretend they did, via options to break the squeeze. Too long didn't read. Data points strongly point to hedge funds using tricks to appear as if they covered their shorts when they haven't truly covered. Full version below. Too long didn't read. Data points strongly point to hedge funds using tricks to appear as if they've covered their shorts when they haven't truly covered. Let me explain exactly what this post is trying to say, and if you aren't exactly familiar with how a hedge fund needs to cover their shorts or how many shorts exist or when the squeeze is about to happen, I cover a lot of that stuff in previous videos as in parts 5, 4, 3, 2, 1, and I have all of those links down below in the description as well as a pinned comment. First, I'm going to cover exactly how the drop in GameStop short interest could be real or deceptive market manipulation. This is an article by Justice Clark Little. Over the past few days, the level of hedge fund short interest in GameStop fell sharply. Or did it? On the evening of Monday, February 1st, Bloomberg reported that GameStop short interest plunges in sign traders are covering. Two separate research firms, IHS Markit and S3 Partners, reported the drop. Short interest in the video game retailer plummeted to 39% of free-floating shares from 114% in mid-January, according to IHS Markit data. According to IHS Markit Limited data, data from S3 Partners, another market intelligence firm, showed a similar pattern, with GameStop's short sales having fallen to about 50% of its total stock available to trade, down from high of roughly 140% reached earlier this year. However, the reporting coincided with a big drop in the value of GME shares. This is a clear evidence that the hedge funds are winning and the Reddit army is losing. No. Unless the short interest data is being manipulated, which is also a real possibility. If the US Congress does any real digging when it holds hearing on the GameStop situation, it will uncover some very interesting quirks of the market, many of them revolving around shorting practices. Most people understand naked shorting to be an illegal thing, and it is, sort of. On the other hand, there are plenty of instances where naked shorting is more of a gray area and not so much a violation of the law as a minor infraction worthy of a parking ticket, and other instances where certain players can short a stock beyond 100% of the float or short nakedly in a wholly legal way. And so this is the part where the reported sharp decline in GameStop gets very interesting. So this is the part where the reported sharp decline in GameStop short interest gets interesting. There are at least two plausible explanations for GameStop short interest declining, giving the appearance of hedge funds covering more than half their shorts, so they're about 50% right now, even as the GME share price fell sharply alongside. The first explanation is that the GME squeezers lost their discipline and broke ranks, and I know that you guys leaving comments down below, leaving positive energy wherever you go, Ape Nation, you would not do that. Don't give them an inch. If a critical mass of holders on the long side of GME started selling to realize profit in GME, paper handlers for example, that would have given the hedge funds an opportunity to cover their shorts via buying back their shares at progressively lower levels as the share price fell. Plummeting short interest along with a plummeting GME share price, in other words, could indicate that the Reddit army is heading for the hills. And the longs were selling early, giving the shorts a means to cover as the longs got out. The notion that the squeezers broke ranks and the hedge funds are winning is certainly the perception that was created. They are trying to make you feel like you've already lost. The Bloomberg article strongly suggests that the Reddit army has lost, and I'll leave that description down below. Short squeezes can only last as long as there is a large short position on the market, the chief market strategist at Miller Tabak and Company told Bloomberg. Once that dissipates, the situation changes completely. But there is another possibility, which is that the hedge fund short interest in GME didn't really dissipate. If the long holders of GME shares did not break ranks and sell en masse, it would have been impossible for the share price to fall and hedge fund short interest to fall at the same time. That is because without a critical mass of long side holders selling into the market, the hedge funds covering their shorts would have nobody to buy from as they bought back their short positions. Imagine like trying to sell an asset that nobody can buy. In the second scenario, however, the hedge funds that are short with tens of billions of dollars on the line could have decided to play a high stakes trick. The trick is make it look like we've covered our shorts when we really haven't because we can't, so that short interest falls and the Reddit army gets demoralized, thus breaking the squeeze. The way that the hedge funds could have done this made it appear as if they've covered their shorts even when they really didn't, involves trickery in the options market. The tactics involved are not a secret. In fact, the SEC knows all about such tactics and published a risk alert memo on the topic all the way back in August of 2013. The SEC memo is titled Strengthening Practices for Preventing and Detecting Illegal Options Trading Used to Reset Reg SHO Closeout Obligations, and you can read it here. I will also link it down below. The memo contains dozens of pages of highly technical language, but here's a quick rundown. If a short sellers are facing a squeeze because the shares are hard to buy or scrutiny for holding an illegal short position, they can create an appearance of having closed their short position through the use of deceptive options trades. A hedge fund that is short a stock can write call options on a stock, meaning that they are now short the call options, having sold the call options to someone else, typically a market maker, and simultaneously buy shares against the call options. And 3, the shares bought against the call options could be synthetic longs, as in they're not real, meaning that they are not part of the original share float of the stock as sold to the hedge fund by the market maker, and that takes the other side of the options trade. This works because if a market maker buys options from an options writer, the market maker has legal privileges to do a version of naked shorting as part of their hedging function. This is necessary under the current rules and current system for market makers to protect themselves when facilitating options trades. As a result of the above transaction, the hedge fund that sold short calls was able to buy synthetic long shares against the call. A synthetic share is one that has a long on one side and a short on the other, but wasn't part of the original float. The synthetic long shares are the other side of the naked shorts, legally initiated by the market maker so that the market maker can hedge. And the hedge fund that bought the shares can now report that they have bought it back, their short position, via buying long shares, except that they actually haven't. The synthetic shares that they bought are canceled out against the short call options they initiated, a necessity of the maneuver by the way of the market maker's hedging of the call position that they bought from the hedge fund. As you see, it gets really complicated pretty quickly, but the main takeaway from this conversation is that they are inventing new shorts, new longs, and then trying to cancel them out as it appears that you have suddenly gotten rid of all of the shorts that you have signed up for. That is not the case, and not the case for the original shorts that originally existed. But the gist of the hedge funds can use tricks to make it look like they've covered their shorts, even though when they haven't truly covered and can't for a lack of available float, and by way of exploiting loopholes that exist due to an interplay of reporting rule delays, market maker, naked shorting exceptions, and legal practices of synthetic share creation, new longs and shorts made from thin air relating to market. Here's a section of the SEC memo that gets to the heart of it. Trader A may enter a buy-right transaction consisting of selling deep in the money calls and buying shares of stock against the call sale. By doing so, Trader A appears to have purchased shares to meet the broker-dealer's closeout obligation for the fail to deliver that resulted from the reverse conversion. In practice, however, the circumstances suggest that Trader A has no intention of delivering shares and is instead reestablishing or extending a fail position. So in plain English, Trader A, in SEC parlance, could intentionally be giving the appearance of closing their illegal short position, when in reality they have no intention of doing so or no ability to do so. Under normal circumstances, tricks like these were used to help hedge funds maintain short positions that, legally speaking, they weren't supposed to have because the shares were never properly located. Go back to my first video about GME to understand a little bit about overshorting. The GameStop squeeze is a unique scenario, however, because it is a very public fight to the finish between the Reddit army, which is us, and the hedge funds that are short. Either the Reddit army wins and the hedge funds pay 4-digit prices, $1,000 or more, to cover their shorts because of the margin calls, or the hedge funds win and the GME share price falls back to the low double digits. In a battle like that, with public coverage influencing both sides, perception is a weapon. As such, if the hedge funds can generate the appearance of having covered most of their shorts while driving down the GME's share price through aggressive selling on low volume, remember, there's a whole video that I covered exactly what they can do to manipulate the price of GME, then the hedge fund funds increase their odds of breaking the squeeze, in part because media outlets will report things like GameStop interest plunges without looking any deeper. But we are looking deeper. Here's the information that you should know. To be clear, it is also possible the first scenario is true. GameStop shares may have fallen precipitously, with hedge fund short interest falling alongside because a critical mass of long GME holders simply lost faith and tried to sell before the squeeze was complete. But it makes a lot of sense to question that narrative given the wide array of deceptive tricks that some hedge funds, certainly not all of them, or even most of them, but some of them have used to perpetuate questionable or even illegal shorting tactics for a very long time. And again, these tricks are so pervasive and old that the SEC wrote a risk alert memo all the way back in 2013. Like, if you can believe it, it's do not do this because we know about it almost 8 years ago. As such, whether the drop in GameStop short interest was real or smoke and mirrors, the fact that changes in the level of short interest can be faked, with hedge funds making it look like they have closed out but haven't, is a serious compliance loophole that should be forcefully addressed. As a side note, the answer to this problem likely resides in the blockchain. Apart from market maker privileges, the three big reasons hedge funds can play games with short positions: delayed reporting requirements, time windows of days or even weeks in some cases for trades to settle, and related transactions being executed in different places or with different counterparties for the sake of deception, could all be answered with a blockchain-based settling and clearing system where transactions are noted instantly and made visible to all parties plus the SEC. So as a blockchain data scientist myself, I have to say, I agree. This is exactly what blockchain is meant to cover, the shortfalls of a system that benefits very few and certainly doesn't give you the tendies to go to the moon. However, if you are holding strong, if you are a proud bag holder, I would really strongly recommend subscribing to this channel, making sure that you do yourself the favor of liking this video, share it with a friend, and finally, go down to the description below and become a bag holder yourself by downloading Webull or downloading Robinhood. And giving yourself a couple of free stocks. Maybe one of them is going to be GME, maybe one of them is going to be AMC, but most importantly, one of them is going to be a stock that you had to pay no money for, and that's a parting gift that I think we can all agree is pretty nice in the time that we are currently living. As always, thank you guys for watching to the end. Thank you guys. For all of you that just subscribed, I really appreciate that you guys are staying to the end. Particularly, leave a comment and I will answer every single one of them. And finally, thank you for being you. Ape Nation, I'll talk to you soon. Peace.